In this video, I'm going to explain what Canada Child Benefit is, what is the eligibility criteria for child benefit, how much you can get from Canada Child Benefit, what factor that goes into the calculation, at what income amount you do not qualify for Canada Child Benefit anymore, and some pro tips at the end of this video. Since it's a longer video, I created different sections which covers different topics. So if you are looking for a specific answer, go to the specific section that discusses about that particular topic. Canada Child Benefit Program is basically a monthly payment to families who have children under the age of 18. This financial support is fully tax-free, and Canada Revenue Agency, or CRA, is the government authority that administered these payment processes. In order to get this tax-free benefit, the recipient family has to qualify with the number of eligibility criteria. So the first one is the Canada Child Benefit is only paid to the primary caregiver. I will explain what the definition of primary caregiver is in the next slide. But in order to get the money, the recipient has to be the primary caregiver. Oftentimes, this is the mother, but it can be the other parents too. The primary caregiver has to be a Canadian citizen or a permanent resident, somebody who applied for refugee protection and they got approved for that application, or a person with indigenous status. So all of these people are qualified to get the Canada Child Benefit. The child has to be under the age of 18. Once the child turns 18, the Canada Child Benefit stops. Also, the child must live with the primary caregiver. The other requirement is the primary caregiver or the family has to file tax return every year, meaning that in order to give the money to the family, CRA has to look at the family's income. So if the family does not prepare or file tax return, then CRA will not be able to calculate their family income. If CRA cannot calculate the family income, they will not pay any Canada Child Benefit. So in order to keep receiving money, the family has to file tax return even if they don't make any money. So a lot of immigrants or people who are going through different career changes, sometimes they don't have income. In order to get that Canada Child Benefit, the family needs to prepare tax return and let the government know their actual family income. The other criteria, sometimes temporary residents also qualify for Canada Child Benefit. So temporary workers such as international student, people with work permit, these are typically temporary resident. To qualify for the Canada Child Benefit, the temporary resident has to live in Canada for at least 18 months before they can apply for the Canada Child Benefit. So on the 19th month, since they established the tax residency in Canada, that family will be able to apply for Canada Child Benefit. Now there is a caveat. If the work permit or the study permit shows that there is a message on those permit which says does not confirm status or does not confer temporary resident status, if either of these two messages shows up on those work permit or study permit, then they will not be eligible to apply for this child benefit. Meaning that even if they have lived over 18 months, because of those messages on their study permit or work permit, CRA actually does not see them as a temporary resident and is not going to pay them the Canada Child Benefit. Normally, most temporary resident gets the Canada Child Benefit after 18 months, but if those people have this message, they cannot get these Canada Child Benefit. Now, what is the definition of primary caregiver? So basically, the way government is defining here is somebody who is taking care of the child. So this means that any person that is meeting the daily needs of the child, anybody who is taking care of the medical need, or anybody who is taking care of the shelter, food, all those needs that a child has, as long as somebody is taking care of that, meets the definition of the primary caregiver. Now, most of the time, the way the government looks at it is usually the female parent is the primary caregiver. That's the default position that CRA takes, unless the family actually let CRA know by an application that no, it's not the mother who is the primary caregiver, it's the other parent. So sometimes there can be stay-at-home dads who can be the primary caregiver. And in those scenarios, you have to let the government know that actually it's not the mother, it's actually the father who is the primary caregiver, and then the father or whoever is the primary caregiver will receive the Canada Child Benefit. If there is a same-sex couple, in that case, only one parent will be paid the Canada Child Benefit. So they have to let the CRA know that whoever is the primary caregiver. But basically, only one parent gets the Canada Child Benefit. Now, what happens if there is a separation or a divorce between the parents? In that case, the CRA has some guideline, and that is basically shared custody, which is how they define. Now, the way government defines full custody is anytime a child is living with one of the parents for more than 60% of the time. So if you think about 7 days a week, if the child lives with one parent for 5 days a week, and then the 2 days of the weekend they spend with the other parents, the parents with 5 days will be considered more than 60% of the time. So the parents who has the 5 days custody will be assumed to have full custody of the child. In that scenario, the parents who has more time as custody will receive the full Canada Child Benefit. So that parents will get the 100% of the Canada Child Benefit. Depends, and the way the calculation works is they will look at that parent's income to calculate the benefit amount. And I'll show you in the next video exactly how the CRA is calculating this. Basically, whichever parents have more than 60% of the custody, they get the full CCB benefit. Now, what happens to the other spouse who has less than 40% custody? That parents does not get any CCB benefit, and only one of those parents get the full CCB, whoever has the full custody. So what happens if somebody stays with two parents and that amount is between 40% to 60% of the time? In that scenario, each parents will get 50% of what they would have gotten if they had the full custody. So imagine that parents A has 50% custody and they would got $6,000 if they had full custody. In that scenario, because CRA is only giving them 50%, that parent A will only receive $3,000. That parents only got $4,000. That's the amount they qualified if they had the full custody. But because they have a shared custody and CRA will only give 50%, in that case, parents B will only qualify for $2,000, which is the 50% of what would have been the payment had that person had full custody. So it's a little bit tricky calculation, but CRA will do the calculation and automatically pay you the amount if you file your tax return on time. And anytime there is a change in custody, actually the families are supposed to let CRA know by an application, and then CRA will automatically calculate and pay them accordingly based on those information. How do you apply for Canada Child Benefit? So the easiest way to apply is when a child is born. So in Canada, as most kids are born at the hospital, so whenever somebody is giving birth at hospital, the hospital typically gives a detailed report of the child, which has the doctor's name, the name of the child, the parents of the child, and their address, and so on and so forth. And that is the details of the child. It also has some vital information such as birth weight, birth height, those kind of information. Now, all the provinces and territories has a program whenever the families are applying for the social insurance number and the birth certificate for the kids, they can let CRA know by giving consent within the application. If they do it, and then the CRA will automatically get notified, and that is the easiest way to apply. Now, some people come to Canada when they are as a newcomer. So in that case, whenever you are establishing residency in Canada, this is the time you have to apply to the government and let them know that this is what you are eligible for. And there are situations where the child may not live with you, and maybe they are living outside of the country and they're coming back and establish residency in Canada. Anytime that's happened, you have to let CRA know, and then they will calculate the benefit amount from that date onwards. Now, the application method is, as I said, is the easiest way is to apply. Whenever you are applying for a birth certificate and social insurance number, there is a option to give consent from vital statistics, and they will let CRA know. And that application is usually the fastest. Usually within 8 weeks of the application, CRA will administer and pay you the first payment for the child benefit. Now, if CRA is delaying the application process, they usually pay you retroactively, meaning that from the date of birth, the child is eligible for child benefit, so they will backdate some of those payment and pay you at lump sum. And then once you are getting on a monthly basis, then you probably will get direct deposit going forward. The other way you can apply is if you have a MyCRA account, you sign into your MyCRA account, and then there is a section where it says apply for child benefit. Same process. You have to enter your information. If you are logging in from your portal, CRA already know who you are, but you have to let CRA know your child's information, their social insurance number, so on and so forth. Same processing time as 8 weeks. It's a faster application process. And then once CRA approves, you start receiving the payment. Now, there is a paper application for specifically for people who are newcomer. So normally when you are a newcomer, there is a RC66 form that you have to fill out. And if you are a newcomer to Canada, then there is also a supplementary form, RC66SCH, which is the status in Canada and income information. These two forms actually needs to be sent to the CRA for them to process, and it's a paper application. It's usually a little bit longer. 11 weeks is the processing time. But basically, on the two forms, you list down your information like your name, social insurance number, when you establish your residency in Canada, what was your income last year, all this information so that CRA can assess and figure out your family income. Now, if you Google these two forms, you will see that they need basic questionnaires. RC66 is also an application for GST, HST credit. You do not have to separately apply if you are applying for Canada Child Benefit. Now, most of the time, you need the following information to apply for those forms. You need the birth certificate to establish or let CRA know the date of birth of the kid so that they can figure out the actual amount. You also need to give them the social insurance number for yourself, the primary caregiver. Sometimes the newcomers, they don't issue social insurance number for minor kids. So in that case, as long as the primary caregiver has the social insurance number and CRA knows the name of the child and date of birth, I think that's enough information for them to calculate. Also, CRA also needs to know your residency status, whether you are a permanent resident, whether you are a citizen who is coming back to Canada and reestablishing your tax resident, or you are somebody who is international student or on work permit. You also need to let CRA know what type of custody you have. Do you have a shared custody with your ex-partner or ex-wife, whether you are married still and the kids live with you, and obviously the income verification. So if you in order to get the Canada Child Benefit, you need to file your tax return so that CRA can calculate your family income. Now, let's talk about how much can you get from Canada Child Benefit. Now, it really depends on the age of the child. So the basic idea here is the younger the child is, it's more costlier to raise because of different costs. For example, younger kids, they have more expenses, such as you have to buy diapers, you have to buy formulas. So it's more costly, and sometimes you have to send the kids to daycare. So the government wants to give a little bit more money to younger kids. And then the older kid who is 6 and above until age 17, there is a different amount that they can qualify. So you can see here, and this is from 2023 base year. So one of the things that you have to understand is all this calculation depends on base year calculation. If you go to CRA's website now, I'm recording this video middle of May 2025. So depending on when you are looking at CRA's website, you might see a different number from this, because as we move on to the next fiscal year or calendar year, you will see maybe 2024 base year or 2025 base year. So basically, all the calculation happens or gets calculated based on your tax year. So right now, CRA's website has the payment amount based on 2023 tax year. So as of today, if you have a child and they're under the age of 6, then the amount you can qualify for is $7,787 a year, which is roughly around $649 a month. Now, if you have an older child who is between age 6 to 17, then the amount is a little bit less, and that is $6,570 annually, and which is roughly around $548 monthly. You might see a few families who have kids with some sort of disability, and there are some additional payment for those families. This is a separate video I recorded where I dealt the program, Canada's Child Disability Benefit Program, where the government is actually giving a little bit more money, which is $3,322 a year or $277 a month. Basically, additional support to those families who has a child with some sort of disability. In order to qualify for that, you need to have a specific application approved. Now, let's talk about how the Canada Child Benefit is calculated. So there are a number of factors that goes into the calculation of the Canada Child Benefit. Now, the first one is obviously how many kids you have. So if you have 2 kids, you're going to get twice the amount that we just discussed in the previous slide. It also depends on what age category your kids fall under. So if you have a less than 6 years old kid, you're going to get more. If you have kids who are between age 10 and 17, you're going to get a lower amount. The second criteria that determines your amount is basically your adjusted family net income. Now, what exactly is adjusted family net income? Now, most people makes money, and that is called gross income. So I might have a salary of $100,000, which is a gross income. Then typically I have some deduction. For example, I may contribute to RRSP income, or I may have some childcare expense, or I might pay a little bit of union due. So those are deduction against my income. So my $100,000, if I have, let's say, $10,000 worth of RSP, union dues, childcare expense, altogether I have $10,000. My net income is actually $90,000. And that's how your adjusted family net income works. There are some little calculation that you need to do, but if you go to your full tax return, the line 23,600 is actually the line item that CRA looks at when they are calculating this benefit amount. If you're a couple, so the CRA will add up your spouse's income, which is basically line 23,600, and your 23,600 line item, and that would be your adjusted family net income. So if one spouse has $70,000 and the other spouse has $20,000, then $90,000 is the adjusted family net income. So that's why CRA needs to know both parents' income in order to calculate the Canada Child Benefit. The other factor is obviously whether you have a child with some disability. This does not directly affect your CCB, but the disability is actually affecting the Canada Child Benefit. Child disability benefit is only paid for a child with disability. And obviously, the last one is the custody, which we already discussed. Basically, CRA needs to know if the parents are living together, if they are separated or they are divorced, so that they need to know what is the family income they need to take into consideration. So if a single mother is applying and they only have one parent, the CRA is only going to look at the single mother's income. If there is a divorced couple, then the CRA will look at whoever has the primary caregiver responsibility, custody, and then they will figure out the amount. So lots of things that goes into the calculation of Canada Child Benefit. Now let's take a look at some clawback. So the way the Canada government is thinking here is some couples make decent living in Canada. So CRA does not think that they should be receiving this child benefit. They are well off enough, so they shouldn't get the tax revenue money. Remember, nobody is paying for this Canada Child Benefit. This money is actually coming from the tax revenue from the government. So program like Old Age Security, Canada Child Benefit, these are different types of program that the government is funding from the tax dollar that they raise. The way government is thinking is as soon as somebody is making over a certain threshold, the government is starting to claw back some of the benefit that they provided. So what is that clawback? It depends on how many kids you have, how big is your family. So for example, here, you can see here the first column on the left is basically somebody who has a one child. So basically, any family has a adjusted family net income which is below 36,500, they will receive the full amount for that one child, which is we already looked at is roughly around $7,700. Now, what happens if the family's adjusted net income is in between $36,500 and $79,000? Then the CRA will claw back 7% for every dollar you make. So for every $10,000 you make from this lower threshold, the government is going to claw back $700. As you can see here, they will take back 7% for every dollar you make between this amount. And then the clawback rate drops to 3.2% when your adjusted family net income is above $79,000. So it's a pretty steep clawback, and this is one of the reasons why a little bit of tax planning is necessary, and I will discuss that at the end of the video, how you can do some tax planning to lower your adjusted family income to get some of this 7% back. So if you can lower your income, then the clawback will be happening at a lower income level. So you will save at least 7% for every dollar you lower in terms of adjusted family net income. And as you can see, if you have two children, then the first reduction from $36,500 to $79,000 is actually 13.5%. And anything over $79,000, the reduction rate is 5.7%. And same goes for if you have three children, between $36,500 to $79,000, it's 19% reduction. And then anything above $79,000, it's 8% reduction. And so for 4 and more children, then it's 23% reduction between $36,500 to $79,000, and anything over $79,000, it's a 9.5% clawback rate. So you can see people who are making more money in Canada, the government is basically saying, hey, these guys makes a decent living. We don't think that these people should get Canada Child Benefit. The program is mainly geared towards low-income family and middle-class family. So anybody who is in the upper income bracket, they shouldn't get this tax revenue. Now, you might be wondering, like, at what income level you no longer get any Canada Child Benefit. And we did some math. Basically, we took the reduction rate, we did some math, and this is the numbers you will find out that if you have one child and he or she is under the age of 6, as soon as the adjusted family net income is around $229,000, you no longer qualify for any Canada Child Benefit. Up until this point, you might receive few dollars. Like the more money you make close to that range, you may get few dollar, but as soon as you hit that amount, you no longer qualify for any Canada Child Benefit. What happens if the child is between age 6 to 17? Then the threshold is lower. Remember, anybody who is in between that age range, they get a lower amount. So when they're clawing back, this is the threshold, which is $191,000. If you have two children, then it is roughly around $251,000 and $208,000, meaning that depending on the age of the child, these are the threshold where you no longer qualify for any Canada Child Benefit. And this is the children scenario where roughly around $270,000 is the threshold. If the child is between 6 to 17, it's roughly around $224,000. And if you have 4 or more children, then the amount is roughly around $304,000 and $252,000. As you can see here, that depending on your specific income level, you may or may not receive any Canada Child Benefit. So unless you really file your tax return, it's really difficult to know how much you will qualify. So now let's take a look at how CRA pays you these Canada Child Benefit. Like when do they do this calculation? So the calculation period is basically as soon as you file your tax returns. For example, I'm recording this video in May of 2025. So we just finished the tax season and CRA already knows how much your family income is from the last year, which is 2024. So when they will pay you the Canada Child Benefit, they will take the 2024 adjusted family net income and they will use that number to calculate how much to pay you, and this payment will start from July 2025 until June 2026. And then from July 27, your payment will be based on 2025 tax year. So it's always you file your tax return, that's your base year, and based on that, they will pay you following July to June cycle. So you will see that your payment will change most of the time in the month of July. So July is the first month where your calculation is adjusted and recalculated, and then you will see that it's always the July month where your payment will be slightly different from the prior month, because that's the cycle that CRA is using to pay you that benefit amount. Now, this is the payment schedule for 2025. As you can see here on the left column, these are the payment that you will get, which is based on 2023 tax year. So remember, 2023 is the base year, and the left columns payments are based on 2023's tax information. Now on the right hand side, if you look at the right column, which is the next 6 payment, these payments will be based on your 2024 tax information. So whenever you are preparing and filing, the CRA will give you a notice of assessment, and that way they will calculate your adjusted family net income, and that is the income they will use to give you the money from July 2025. Now, your payment method most typically is direct deposit. Most people set up direct deposit with CRA, where all this benefit goes to your bank account, usually on the 20th, as you saw on the previous slide. Some people don't do direct deposit, and for those people, CRA usually sends you a check. You can take that check, take a picture of that check to deposit through your mobile banking, or you can take that check to your bank to deposit to your bank. Now, we already discussed a little bit about child disability benefit. There is a separate video on this topic alone, where I go very deep into the eligibility, the application process, the payment, the retroactive payment, how it works, what application you need to submit to CRA for retroactive payment, but I just want to quickly give you a heads up here. CDB is paid to families who has a child with disability. In order to qualify for this, the child has to have disability tax credit. This is the application that needs to be sent to CRA with the help of the medical professionals. If a child has some sort of disability, then your medical professional will attest that and you submit that information to CRA. CRA reviews that application. If they approve, then you qualify for this CDB benefit. As of today, base year 2023, the payment for that amount is $3,322 a year, and you will get at the same time with your Canada Child Benefit. So you do not have to apply separately. As soon as CRA knows that the child is eligible for disability tax credit, CRA will automatically calculate and pay you at the same time when you receive the Canada Child Benefit. So this is the same department that administered that Canada Child Benefit. So you don't need to apply separately. Now, so far I explained you the Canada Child Benefit, which is a federal program. There are number of provinces and territories that also have some sort of provincial program. Now, if you look at the chart, on the left side, these are the territories and provinces that has some sort of program. So Alberta has ACFB. I live in Ontario, so Ontario has Ontario Child Benefit, and you can see that these numbers are the full amount that you can qualify for one child. So if you have multiple children, then these numbers will be slightly higher, but you can go to the specific province's website and they will give you the eligibility. Most of the time, these are automatically calculated whenever you are filing your tax return. So if you qualify, the CRA will automatically provide you the provincial benefits too. Now, like the federal program, most provincial government programs are also income tested, meaning that if you earn above a certain limit, you do not qualify for those programs anymore. For example, in Ontario, if somebody is making over $26,000, there is a partial payment. You do not get the full amount, but you may get a partial amount based on your adjusted family net income. Some provinces such as BC, if you make less than $29,000, you get the full $1,700-$500. But if your income is in between this range, $29,500 to $94,000, you get a partial amount. And if you make more than $94,000 as a family, then you no longer qualify for any family benefit. So each province has their own rule. So whatever province you are in, make sure to understand their amount, how much they provide for one kid, two kids, multiple kids. So make sure to check them out. What are those scenarios where you stop receiving Canada Child Benefit? Now, the first one is obviously if you lose one of those eligibility criteria. So if you stop residing in Canada and you move out to a different country, obviously you are no longer a resident of Canada, so Canada Child Benefit will stop. If you miss tax return, the CRA will not be able to calculate your adjusted family income, so they will just stop paying you. So that's also a possibility. Sometimes CRA asks for documentation. So if you're a newcomer, they want you to verify your worldwide income or some sort of immigration status. In those scenario, until the CRA is approving your application, you're not receiving any Canada Child Benefit. But once they approve, they will retroactively pay you for any missed amount. Obviously, the big one, as I said, residency change. If the primary caregiver is no longer in Canada or the child is no longer a resident of Canada, then CRA will stop paying that. Now, if you are going for a vacation for a few months, you are not changing your tax residency, so that's fine. But if you are completely out of country for usually more than 6 months and you become a resident in a different country for tax purpose, that's where you stop receiving the Canada Child Benefit. But if you are just vacationing to your home country for a few months, that's perfectly fine. As long as you are a resident of Canada for tax purpose, you're eligible to get that Canada Child Benefit. Now, obviously, as I said, if your family is making over that threshold amount of income, as a family income, then CRA thinks that you don't deserve to receive these government funds, so obviously you're not going to get it. The other obvious reason is when your child turns 18. So obviously this is a child benefit. As soon as somebody turns 18, they are no longer a child, they become an adult, and so CRA is not going to pay any money to that family. And finally, the death of the child. So if unfortunately somebody loses their child, CRA will no longer pay this Canada Child Benefit. CRA used to stop the following month from the death of the child, but since 2025, CRA will continue for at least 6 months from the date of death, and the families will receive for at least 6 months from the date of passing. So those are the scenarios where Canada Child Benefit will stop paying. Now, at the beginning of the video, I explained a little bit that I'm going to share some pro tips at the end of the video. So the first one is basically, as you might know already, that all these benefits are based on something called the adjusted family net income. And I already give you a hint of how you can reduce your adjusted family net income. So basically, there are a number of ways you can reduce your income. The most common one is RRSP contribution. If you have any dues, like a membership dues or a union dues, those are also deduction against your income. If you have childcare expense, if you are paying alimony, all those are deduction against your income. So those will lower your adjusted family net income. So make sure, sometimes even if you are not in a high tax bracket, RRSP may still make sense because you are getting that 7% or 13.5%, depending on how many childs you have, you are still getting some of those money back through Canada Child Benefit. And that's some of the way we can lower your adjusted family net income to boost your Canada Child Benefit. The other pro tip is basically doesn't apply to a lot of people. Some families have enough funds where they can invest in the name of the child. So a lot of time, parents have already maxed out their RRSP, TFSA, RESP account, but they want to invest for their kids under their kids' name. Now, normally, if you invest, and these type of investments are often opened through an informal trust. Now, most of the time, if somebody does not have millions of dollars, normally people don't open up formal trust. And for majority of the Canadians, if somebody has lots of surplus money, they typically open up informal trust for the kid. Now, if somebody opens up an informal trust and start investing in that account, normally the way CRA treats those income is any dividend income or interest income attribute back to the parents. So imagine that I have some extra $20,000 and I already maxed out my TFSA, RRSP, RESP, all those accounts, and I want to invest that $20,000 under my child's name. Normally, if I do that, any income that I get, let's say I buy some Apple share or maybe I buy a GIC for my kids, if GIC pays interest, that interest will be attributed back to me. Even if the account holder is my son, because CRA thinks that this is actually my money, because the child is not supposed to have his own money, CRA will attribute back that income to me. So this is called attribution rule. So dividend income and interest incomes are attributed back to their parents whenever you are investing in this informal trust. But capital gain, meaning that if I invest in a stock for $50 and it goes to $60, that $10 increase will be taxed in the hand of the kids. So that is fine, but interest income and dividend income is taxed at the hand of the parents. Now, there is one exception, and that is Canada Child Benefit money. So if I can show CRA a trace and say, hey, this money that we are investing for under my child's informal trust is actually from Canada Child Benefit, and I can show that trail, there is no attribution rule. So this is a very sophisticated approach where you can actually take those $5,000-$6,000 annually that you receive from the CRA for your child, and you can actually channel that to those informal trust, and it will be taxed in the hand of your child. And normally most child has zero income, because up to $15,000 you don't pay any taxes. So that's a nice way to split some income. Now that only happens to a small percentage of the population. That only happens when most families max out their TFSA, max out their RRSP, max out their RESP. Only then this makes sense. But again, that's why you need to talk to a financial planner who can walk you through all those strategies and rules so that you don't get burned with the CRA. So that's all I had for Canada Child Benefit. If you have any particular question about any specific section, please put that in the comment section. Or if you want us to make any future video on a different topic, make sure to put that on the comment section too, so that we know what exactly you are looking for. And if you are looking for a financial planner for one-to-one advice, this is our booking link. You can have a complimentary meeting and see if we are a right fit. Until then, see you in the next video.